Hey everybody, this is Jim at SP500chart.com. It's a little bit before 5 o'clock on November 14th, and I've got a head cold, so bear with me. Before we take a look, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, looking at a 30-minute chart, I think this is going to be the chart we stick with and the one that is the most relevant. I've got a couple things I want to show you. We've seen a number of patterns over the past 3 weeks or so. To begin with, we had a very small hint at an inverted head and shoulders pattern right here, which broke out, had a target of about 1772, which was met. We had another inverted head and shoulders pattern right here that had a target of, this was not 1782, this had a target of 1774, pardon me. This first one, 1774, tagged it. This next one, right here, had a target of 1782. It failed to make that target, but it was still a pattern worth noting. Now, the one that we've been looking at with the most interest and has broken out actually is this larger pattern here, with again a sort of a short right shoulder, like this one had a short right shoulder too, not in time but in depth. We've seen others where there's almost no right shoulder at all. So what I want to show you is, even though this pattern failed to act on its own, it still had a target of 1782, which was met yesterday. Our latest incarnation, this larger pattern, has a target of about 1802. So we are looking at another inverted head and shoulders that is part of a threesome. One, the smaller one, and then this larger one. And we had a nice day today where the market just seemed poised to go up. And it did. It just went up. Now, so this is what we got. We have a target of just over 1800. We have a neckline at about 1774. I'm going to draw one more line on this chart, and I'll tell you why it goes here. If you don't know already, you may. I'm not the only one here who knows stuff, okay? I know a lot of you folks really enjoy technical analysis. But here's the deal. When you trade, according to the textbook, when you trade an inverted head and shoulders pattern, you typically place the trade at one of three locations. The first location is on a return to the neckline. Well, the problem here is we have such a small target, really in terms of percent, that oftentimes the breakout move is the move that meets the target. So that one may not pan out. But you still need to know that. Return to the neckline prior to having met the target is usually a good spot for the trade. Here's the second one. The second one is a return to the line drawn from the head back here across the right shoulder. Okay? We got one more. The next one is a 40% retracement from the breakout top to the bottom of the right shoulder. Okay? So what that would mean is, let me get my little retracement tool here. That would mean wherever the breakout ends, in other words, if we were to back up tomorrow and we came back to this level right here at about 1780, that would be the 40% retracement. And just going by the book, the deal is you look for whichever one of those happens first. That's where you consider a long position. So guys, right now, I just thought I'd share those little things with you. That means we've got possible support at 1780. We have another line of support at the neckline at 1774. And then we have another line where we could expect some support, and that is that line drawn from the bottom of the head through the bottom of the right shoulder. So far this has been working very well. Let's see when we meet this target. Let's see if we meet it right off the, before we have any form of pullback, in which case then I would exercise a little bit more caution on a pullback to one of these support lines, because once the target has been met, then that's sort of evidence that the pent up pressure of buyers who bought all of these dips, at that point it could be fully released, if that makes sense. So guys, there you have it. That's your video for November 14th, 2013. We'll go into a little bit more detail about some things tomorrow. Right now, let's just keep an eye on this pattern that seems to be working so far. What was I trying to say? So far, so good. Thanks for watching. Take care.